What's up guys? So here's the start of a new series. I'm doing trade of the day for both the London and New York session, and I'll be doing that for the whole of June. So I should be uploading every day, every trading day that is. So there should be 20 episodes in this series. So let's get into it. So trade for the 5th of June, Monday. Going on the daily time frame, I saw this daily fair value gap being respected. What I mean by respected, the bodies aren't breaking through it. The wicks we can see are holding it, pushing it above. Then on the daily, we get a break of this swing high. So this is a sign that we could be moving bullish now. So go to a 4-hour time frame, and what do I see? More or less the same. We can have a break here, a break here. Either way, we can see it's broken structure to the upside. Now we want to buy in discount, so I'll find my premium and discount and draw a range, or the 50% here. So now we're only looking for buys in this area. We're not going to look for anything up here, otherwise you wouldn't have had much success. So here we have a fair value gap, so a 4-hour fair value gap and a 4-hour order block here. So we can monitor the reactions that we get there. So it doesn't mean that because I enter on a lower time frame, I have to wait and see what happens here. I'll go on a 1 hour as well. And what I see on the 1 hour is this wick here. Now this wick here to me is liquidity. If we're coming down, right, we just took out, this could be seen as buy side liquidity. We have to take out, we don't have to, but it's more probable we'll take out some sell side liquidity, which are these lows. So I want to take out this, which would be tapping into the order block, taking that out and going up. We also have a 1 hour order block right there. So let's fast forward. Let's have a look on the 15 minute. On the 15 minute, again, we want to see this taken out. So we're not going to look for anything above this. And we have a balanced price range from here to here, which we can use as well. So if we dip under here, I'd like to see it go up like this. So now going into London, mark out the kill zone. So 2 a.m. to 5 a.m. is London kill zone. So I can take away this fair value gap, we know it's there, and here's the order block on the 4 hour and the liquidity. So now we've got our bias. I want to be trying to sell down to this area if possible. So I have to see what price shows us. So coming into it, what we have here is price pushing lower, and it took out the Asian low with just a wick, and then another wick as well. So we took out this. So if we see here, we took out this low and into the 4 hour order block. Now we'll monitor reaction. We didn't tap into this though. So let's see what happens. The reaction on the 5 minute. And let's just, oh, it's gone a bit forward. Let's see this though as well. We have these equal highs that have been stopped out, and then a strong push down, right? Once we get that strong push down, look at this. We have an order block here as well with inducement right here. This means, so I'll show you these highs. See, there's stacked highs. So that was liquidity taken out, pushed lower. Now we've got this high. So it's likely that what can happen is this kind of pattern. Down here, goes up and back down. So looking at that, we can see what happened is price tapped directly into it, and we didn't get a BMS on the 5 minute. This high made a low, and it was just a wick, showing me it's a sweep, not a break of structure. Now that I've seen that, I'll go on a 1 minute time frame and look for a setup. So what do we get here? We have a break of structure, and then I can see we have a nice, again, a balanced price range right here So that's simply going to be my point of interest. You can put your entry right there, so make sure you get in. Stop loss safe there, and now we can target these lows, or can go a bit lower into here. So safe target is these lows, but the risk to reward wasn't great. So if the risk to reward's not great, instead of maybe moving your stop loss, which you can do, you can always put this up a bit to be the correct risk to reward that you need. And if you miss the trade, you miss it. It's just the way it is. But let's go forward. So now we've got here, we've got inducement into that point of interest, and now even more so, we've got inducement right here. So price went down, had a major break over there, came back up into it. So we're entering right here. Stop loss is there, and now our target is here. So price really just messed around yesterday, and I did get this trade, but unfortunately I didn't follow my break-even rules, and I got tapped at break-even here, but the analysis was correct. And even though we did get close to tapping me out, it didn't get there, and then it started to drop. So that's the London session done. There wasn't much to offer. It was very choppy, pretty bad price action, but still everything makes sense. Then we go into New York session. So just carrying on from there, price started to move lower, tapping into that order block. So now we're expecting price to continue lower. So let's see if there was a trade in here. Depends if this follows your rules. Based on my own, it doesn't, so I wouldn't take the trade in here. But you may have taken the trade directly off here. And if so, that's good, but this is just my best trades of the day. So now what we've got is this. We'll tidy this up a bit. We have the London session, sorry, the New York session. And we have here sell side liquidity getting taken out into that 15-minute balance price range that we mentioned earlier. So, and there's a 4-hour order block and a 1-hour order block in this area. A lot of bullish point of interest. And so now what we'll do is we're going to look at the reaction there. But also look at this. So much trend line liquidity there, over here, even just above the Asian highs. The same thing, trend line liquidity. So we've got targets that we can get, and we're now in discount of the higher time frame range. So I hop onto a 5-minute time frame, and we get into this, and then pushed up a little bit down. And now what I see is we have a sweep of the low. So I'll just go to a 3-minute time frame and have a look what's going on. I can see that we broke with some real speed. Now this is where my entry would come in. I would enter at this fair value gap, can enter at 50% of it, can enter here, depends how big the stop loss is. Because it's only 4.2 pips, and I can see I have a lot of room for my first target would be here, which is 6R already with 4.2 pips. So I'm not even gonna bother trying to get lower. But as you can see, 50% actually hit almost perfectly. So if you want, this would be the trade of the day, I suppose, but sometimes it's better just to get into the trade rather than miss it, especially if it makes sense risk to reward wise. So 3-minute, we have that there. 1 minute, we can see it was equal lows, so it swept there. And there was no need to refine it further because it's so small, and now we just have to wait for the trade. Simple as that. So could have had another entry over here, and what we can see, this was news, so unfortunately I wouldn't be in this trade based on my rules, but if you are, you'd have some very good profits. And what we said is we would target this, and then we could target these highs here. So 10R there, and the other London trade was, I think it was 2.5R roughly, somewhere in here. Anyway, that's it for this first episode. See you guys tomorrow. Peace.